Hey everybody, it's Mark Newton. So I thought I would do a little video on Bitcoin. We've obviously had some very nice price action thus far year to date, and prices are up over 82% or so year to date, really up over 45% just for the last month. So incredible price action, much deserved, much needed, and a welcome relief, I think, to a lot of crypto investors. You see the move just in the last day. We've actually broken out above this key 29,000 level. Why was that important? Well, if you measure the length of the move just since last November up, this was an exact 100% alternative projection of the first move up. Oftentimes that can have significant importance. And so you see that momentum on a short-term basis, we did officially get overbought, but momentum is starting to curl back even higher. And on a weekly basis, you see that the first meaningful upside target, just based on prior swing highs, should come about right near these former lows from back in January of last year. Typically, if a stock or an asset makes a significant low and then drops through it, then that area of former support is normally the first resistance on any retest. So that's going to hit right near 33,000, but I actually suspect we're going to get higher than that. And I think it's right near 36 will be my initial target, which likely comes about in the next 1 or 2 weeks. Now, people wonder, how do you come about these targets? And I'll go over that in a minute. Initially, you just see that momentum based on traditional technical indicators like MACD is still very much positive, but weekly momentum is starting to get overbought. Now, that's not technically a sell signal per se. Oftentimes, getting overbought in and of itself can bring about the most explosive moves. And so it's important to watch for that waning from overbought territory versus just getting into overbought itself. But when you look at things like DeMark indicators and cycles, it really helps to put everything together. And you see this move in the last couple of days, still very premature in this count. So we're on a 6 count and an 8 count based on indicators like TD sequential and TD combo, which measure upside exhaustion. In other words, they give sell signals and uptrends and buy signals and downtrends. And so these right now, based on time, are at least about 7 trading days away, 5 to 7 based on a daily chart. When you look at a weekly chart, that also sheds some light because we were on a weekly 6 count. Normally, what they call TD sell setups, when you have 9 consecutive weekly closes that are above the close from 4 weeks ago, you get a potential stalling out or consolidation. So this is about 2 weeks away, and the first TD prop level is going to happen right near 35,343. So combining the fact that we'd be nearing this first key Fibonacci level in price, along with time based on at least DeMark that we're coming into this area, likely means that right around either the 20th or the 27th of April, right towards the latter part of the month, we should get a stalling out in price for Bitcoin per se. There's no saying that other coins can't take the lead. Of course, we've had tremendous amount of outperformance and really dominance in Bitcoin versus all other coins. The final thing I want to show you is just with regards to what some of the cycles are showing. And this is interesting because when you look at, over the last dozen years, the weekly cycles that tend to have the most importance are things like the 41-week cycle. And when looking at other cycles with harmonicity that share characteristics to the 41 cycle, we see that the 85-week cycle stands out. Occasionally 90 weeks has been important, but you have to change the phasing a little bit. But when you combine those, this has given us a lot of peaks and troughs over the years. It does show the potential to peak out as we near the month of May. Now this is using 85 weeks, 41 weeks, and 28 weeks. If you strip some of these out and just look at, say, the most important in my view, which is really the strongest for Bitcoin, which is the 40-week, this peaks right around now and turns down really until September. And so, as I said, these are cycles only. This is only one cycle of one length, and when combining others, you see that it does show the potential to carry up a little bit longer than right now. And so this really targets the end of April as being the first meaningful possible inflection point. This did, of course, give peaks back in March of 2021, and also peaks back in July 19, and also the meaningful peak back in December of 17. So it is something that I take pretty seriously. It did show a bottoming out heading into this year and a run up into the spring. So in general, when I see technical signs of exhaustion on the upside and evidence of a price reversal, then it's really time to pay attention. For the time being, near-term price trends and momentum are up. It still looks like we can move higher, but I really want to be a little bit more cautious with regards to risk reward if and when we get into the mid 30s. My overall target for this year was 40,000, and that might prove shy. We shall see. But I do think that in the near term, we move up to right near 35, 36, and then we'll check on things like momentum divergences, DeMark, more evidence of seasonal headwinds that could come about. And this would pinpoint, if this is accurate, a pullback really into August, and then a rally into year end, and then an early year decline before a larger move up in 2024. So, that's cycles only. We obviously want to respect price action more than anything and what's happening with volume. And so, initially, I am very constructive, and I think prices can move higher in the near term. And given the volatility, that's what a lot of people are concentrating on. So I say a 10 to 15% rally is possible between now and late April. And upon that, I think we have to really be a little bit more cautious. So we shall see. Thank you, everybody, and have a good night. Take care.